Morning everybody, welcome to Stockradar Stocks on the Move for another week. Today's date is the 19th of January 2023. My name is Richard Lee and I manage the stockradar.com.au website for you. Okay, stocks that blow your mind we're going to talk a bit about today. Those ones that make that big push higher, and we've seen a couple of stocks do it last week. And how can we get set for those sort of stocks? We'll have a little look at that as we go through the stocks today and trading tactics a bit later on. Firstly, let's look at the top 10 and trend intensity rankings at the moment. We've got IEL at the top there, Northern Star, Commodities is doing very well still, so is Sandfire. Super Retail Group's jumped in there, 7 Group is doing nicely again after its break higher. Treasury Wines just keeps humming along, as does A2M. BHP's made a new high last week, and Brickworks is also starting to move higher again. So they're your top 10 at the moment. There's plenty more in there, another 30 stocks or so in there that are all trending high at the moment. So, but that's your top 10 at the moment. As I said, BHP's kicking higher there. Our stock picks review, our open positions of those 39 stocks are 27% up annualised, and they're improving this week again. Don't forget to check out Trading Centre for an update on all our covered stocks in the ASX 200 or 162 regarding stops, entries, exits, stops, reversals, all that sort of stuff there for you. This week in Trading Tactics, the stock market always surprises us. Why? Okay, an interesting concept to discuss, and we can learn how to take advantage of it. Okay, so the stock market always surprises us. There's always the unexpected, and the unexpected is a really important thing because that's what drives prices. So if we can learn how to capitalise that on to some extent, or be there, then for the possibility, then that's what we want to do. Okay, so that's what I want to talk about today. Firstly, let's get into the markets. In the Dow Jones, it's still hanging up there, the highs there, doing pretty well. Here we are. Okay, so it's hit this resistance area, this wall, as I should say, which is the old highs. That's certainly going to give it trouble, but everything else is pretty positive. We've got a high low here. A bit of volume's come back into the market. The momentum's positive. It's above the average. It's looking pretty good at the moment. So there's a little battle going to occur up here. But you know, the buyers are strong again. We've had a very good month, or a couple of months in fact, the last couple of months, which has been very good. We've sort of got rid of all this downtrend business here, and we're now starting to move high. And I like this little higher low at the moment if we can hang on to it. Okay. Now the S&P, I just want to show this as well because that's the Dow Jones, which is pretty narrow as we know, and there's some big stocks doing really well in that Dow at the moment that I pointed to last week. The S&P is broader and has a few techie stocks in there, so it's come off quite a way, but it's now looking pretty good at the moment because it's now, if you look at this volume here, this volume, this volume that we can see at the moment is very, very strong. There we go. Impressive is the word I'm looking for, because this is really very strong at the lows here, which is usually the sign of a bottom when you get this sort of peak volume. So this is probably a pretty good risk area at the moment, or low risk area. We've now had a rally off there. We can come back a little bit here and a bit of selling here, but now we've got a bit of volume on the upside again, so it's not over yet. We have a higher low, which is good. So this selling didn't actually create a low down here, which is good, and we're now turning up to try and test this moving average, the downtrend line, and the horizontal resistance at 4,071. So that'll be an interesting one to watch for you at the moment. And momentum's also sliding up, so the downside pressures are going, so it's starting to look better finally on the S&P. The Nasdaq is still trying to create a low there. It's not really doing too much. There's a possibility of a little reversal here. A similar thing to the S&P, but it's not quite as evident. The selling has still pushed this price back down to the lows, not through it, which is good. And we're levitating again towards the moving average of downtrend line and a bit of horizontal resistance there. So that's my little resistance bubble that I'll be watching at the moment. If we can get through there, we might see a rally up to this 13,000 point. So that's the Nasdaq. Gold is still, didn't do much this week, but it's been quite strong of late. We have a couple of gold stocks there, not a lot, but a couple of them which are doing okay. We don't need many. It's all about quantity, not quality. So they're looking okay. The gold stocks that we have, Northern Star's in the top 10. Copper, it's also been quite strong. It's moving into that area of resistance, as we know, so it's positive, but we've still got a little more work to do yet to really convince us, although as long as this sort of pattern continues, this high volume and the rally continues, then it'll sweep this thing aside, this resistance, and move higher. But the sellers may well come in. This is starting to turn back into positive territory again, momentum, so the wheels are turning slowly back on this one here. It's really just that resistance level, whether these sellers come back in or they reckon this market's going to go higher again. So, but for the moment, the upside is where we're at. Brent crude, it's also down at the moment. It's not doing much. It's hovering around 80 bucks. It's come off from 120 to 80, which is pretty big slide. It's reasonable volume. Momentum's now pretty weak still, so there's really not a lot for us. It's still a bit concerned about what OPEC's doing, what Russia's doing, making life a little bit hard for the crude traders at the moment, and they're sort of trading around treading water at the moment in one spot. Okay, ASX 200 again looking a little like the Dow. It's had a good couple of months. It's now rallied up. We're actually gone through here. The Dow's come down. We've actually rallied through here. I think we're probably pretty flat today. I'm not too sure, but this is a pretty good sign here. We've had a good rally from here. We're pushing right into this area here, which is pretty positive. We have that mining bent as opposed to the technical bent that the US market has. That's why we're a bit stronger. So, as I say here, I think the clouds are clearing. Can we break through? So we'll have to wait and see, but we're not far off it. And 76.30 is about the high there, so we'll keep an eye on it. And momentum's turning positive now. After we've had this good move higher, pull back to a lower high, and a rally through that point there. A very, very good sign indeed. Okay, so if I just go back to our stock picks, we've got 4 out of 4. We're up 4 again this week to 40. I think we had 4 or 5 in last week, so we're picking up a few more stock picks there. So 39 actual stocks. From 162 stocks covered and 1 ETF from the 21 covered there, which makes 40. So slowly but surely we are chipping away, and there's enough stocks in there for us to make some good money, especially with our Energizer portfolios. Okay, now so that's the markets. Now I'm going to get into have a look at firstly the portfolio update. A conservative portfolio has only got 4 out of 20 still, so some of those leaders just aren't performing at the moment, but a couple are. So the Energizers 5 and 10 are both still full, and they're doing really nicely at the moment. A little bit of a weaker week last week, but we're back up again this week, and they'll be showing some good gains this week. Okay, so what I'm going to cover, we did look at the miners last week, and they've done pretty well. If you check out the trend intensity table, there's some good profits starting to build into some of those miners, like Sandfire and things like that. So they're doing pretty well. This week I'll cover a couple of leaders, which I always do. I'll look at one downtrodden stock, because I know there's a lot of opportunities out there if we can just bite the bullet and take these ones. I'll look at a property stock, another miner, a retail stock, and also consumer staples. I almost looked at it this week, but it's looking interesting. There's some stocks there. I mean, I know Coles, Woolworths, Metcash are struggling. There's also Bapcor in there. So there's some interesting stocks happening in there. We saw the consumer discretionary stocks fly a little bit this week. Consumer staples is different, I know, but there's some interesting things happening, and I think it's worth talking about next week, so we'll have a look at those as well. So first off this week, then we're going to go to Telstra, because is it starting to move out of this trading range? Well, we're getting some good patterns here, and what I want to also show you on the stocks today is also these volumes that are starting to appear in the market, these big green bars, which are nice green bars, and when it pushes the price higher, we like that. Not always clear, but when you get a clear picture like this, you've really got to back it and go for it. So this is certainly going to test this high into this range here of around 420. It's looking good. Tendency rating is +1. It's above the average. Held the average last time in the pullback. Volume is looking better. Momentum is just starting to move off the 0 level. So the stars are starting to align for Telstra. So I would think if it can get to the 420 level, we'll get a positive rating on that one. So keep an eye on that one. Telstra is a good trending stock. When it trends, and we've got a good consolidation here of this move here and a breakout, which would certainly encourage a fairly good trending move from here, which we can jump on, because we love to jump on momentum moves that trend. That's what we do. Okay, Goodman Group. Now we're in 2 minds here. We're getting a little trend reversal off the bottom here, which you can see. And so we've got the lows down here. We saw a bit of some heavy selling push it down to this lows here. Then we saw the buys come in here and thinking that maybe the $16 level is a bit of a value area, and they pushed the price up, and we've got a pull back to a higher low, and then the market's starting to move above this area here. So we're starting to get a trend reversal. Whether it's qualified by trend intensity rating, I don't know. I'll have to wait until the end of the week. The rating is -4 at the moment. It's moving above the average, but volume's a bit light, and the MACD momentum is still a little bit weak. So it'll be a borderline case, but it is down 40%, so it is in that area where we'd like to think about if we get a good trend reversal, then we'd like to jump on it because we think there might be some sort of reaction move from the downtrend. So we're watching that one, and Movox, another one you can have a look at, which is in a similar sort of position. So by no means certain, but it's certainly worth watching at the moment. So there's a couple of leaders for you, which are looking interesting. Treasury Wine Estates is another stock which we know we like, and we've held this one for a while. It's moved up quite nicely of late. So what I like about this one now, we've got our highs up here and our lows down here. This is the major trading range, $19.20 to about $8. We've been trading in here for a while, since 2020. We've had a slightly upward bias here. We started to break a little trend reversal here, which we've got onto, and we've got a trend reversal. We've got a bit of volume here, which you can't really see that much of there, but it is there, a bit of volume coming through here, and we've got the momentum index also kicking above zeros. So that gave us a signal to buy. It rallied straight to the resistance point and struggled a little bit for a few weeks, and now it's starting to break through and now starting to clear away from these highs. So this is a really good sign, I think, now for Treasury Wine Estates. It starts to develop its trend nicely. It's up 17 or 18% since we entered, which is good. So we've got a nice cushion there. Our stops protecting any losses, so we won't take any losses on that one now. And all in all, we've got a target up here around $19, $20 potentially. So Treasury Wine Estate is starting to get its eggs in a row and doing the right thing, and the market is slowly starting to warm to it. And you can see this volume here, which was fairly light through here, but generally here it's just been a lot higher and more green bars through here, which is all very nice. Trend intensity rating is actually +10, so everything is good for Treasury Wine Estates. Okay, BlueScope Steel. We'll go to the mining sector here, or materials sector. This has also done pretty well. BlueScope Steel, we've had a 41% correction down. But now, it's starting to, it's also a fairly good trending stock, BlueScope. Like I said, Telstra was before, it trends up, it trends down. And now we're starting to get a move from an accumulation, downtrend accumulation, into an uptrend potentially. Okay, so we've got a solid push higher. Here's that volume again, pushing this market higher, which is really good. We now get pullback to a higher low, and now starting to rally high above the average, above the trend line, above horizontal resistance. So it's starting to show all those constructive signs that we want to see of an uptrend developing, and momentum is just starting to get into the positive area. So we can also kick this trend intensity rating higher up towards the 8 or 9 to 10s shortly. So that looks quite good and worth following. Again, as we always with any stock, we always have our stop in place to manage our risk, just in case we're wrong. So as good as it might look, it may not always turn out the way we want it to, and sometimes it doesn't. So for the last year, it's been a bit like that, but then things are starting to turn a little bit, and we can see some of these trending moves happen. Some of the behaviours of some of these stocks have been a bit excited lately. I'm going to talk about one a bit later on. That are typically bullish, typically uptrending type behaviours, which is characteristics we want to see. Okay, back in the mining sector, alumina, might call it boring, might call it dull, but here it is. It is now hit about the 130 level. It's created what they call, you can call it a shoulder, head, shoulder pattern. It's a reversal pattern where the shift in the dominant control is going from the sellers to the buyers. And we can see here we've got a low point. We have a rally, a pullback to a higher low, and then we rally through this point to give us a trend reversal. And we've also got some very good volume down here. If I can squeeze this up again and get rid of that big tick back there, we can see some excellent green bars through here, pushing this market high, which has been really good. So momentum index is just about to turn positive. It's neutral at the moment. So all these things are starting to turn in favour of BlueScope, alumina, and looking pretty good to add to our mining sector, which has got some really good profits in there already. Okay, so some strong buying occurring for alumina, and it is the low of the trading range, and you've got plenty of upside potential on this one, I would have thought. Okay, so that's alumina. The next one I want to go into is a really exciting stock, this one, Super Retail Group, which used to be Super Cheap Auto, but it's sort of, JB Hi-Fi also did pretty well this week. It announced a really good result, and I don't know if you saw Abernethy in the Chanticleer this week in the Better Financial Review saying, well, really, there's all this doom and gloom by these economists and CEOs saying how bad things are, and our Treasurer Chalmers saying how bad things are really. But in the end, when you get things performing like Super Retail and JB Hi-Fi, and there's some other good results, then things aren't really that bad as far as I can see. And remember, the stock market looks down the track. It doesn't look at today, it looks down the track a year or two. So we're always looking for those sort of things. So Sometimes we forget about trying to reason some of these things. We just got to follow them and let them guide us sometimes when price action occurs like that. So, as I said, the stock market always surprises us because there is a mismatch between emotive behaviour and the reality of how the stock market works. This is why predefined processes and strategies always perform the best. So in times like this, even at the bottom of COVID, we saw all these signals come on board and we were also terrified of another leg down. And the same situation here, the unexpected came in, the market wasn't really expecting a great result, it came a great result, and of course the share price jumps 10 or 12% in a day, and that's what we want to see. And that's sort of the behaviour of a bull market stock. So here we've got super retail, we've got a rally from the lows, a pullback to a higher low. It then creates a trend reversal back here, back in November. And we've got the great volume here, which is what we're loving at the moment, and the momentum gets on board a little bit later on, just around here. And all of a sudden we get a little pullback, and then we get this move up here. And you can see these last 2 weeks here, there's some interesting situations where the price is rising just before the result, and the result came out and bang, no one was expecting it, or some might have been, but no, not all of us. So all of a sudden it jumped, and that's on some great volume, momentum's positive. So when we're looking at these blow your mind stocks, they'll always occur when stocks are in uptrends. So if we can set ourselves and we watch these trends and don't ignore these sorts of things. Even though the prices come down, these are the best opportunities. And whether it's Goodwin Fielder or BlueScope or Fisher and Paykel, whoever it might be, all these stocks that have come down, if you get a signal that says this stock is starting to trend again in momentum, then the possibility is then you could be in for one of those unexpected results. So that's what we want to do, and if we can do that, then we can take advantage of this. And this is what we've done with Super Retail Group. So we're well up in this stock, and it's been performing well, and I think it's even up again today. So this is what we want to do. Watch your volume. This is not an insignificant event when this occurs, and this trend reversal is not an insignificant event. It's price action telling us what it's doing. So that's really, really important. So that's Super Retail Group, and I'm very excited about this stock. $14 is the next resistance level. It's around about just above $12.50 at the moment, and looking very nicely, and volume's looking very good. So good clue, and then the follow through came. So that's Super Retail Group. Okay, the next one I want to have a look at is Worley. Now I did look at this one a while ago, but I do like this stock, especially from a longer term point of view. If we look at this, if I just zoom in on this one here, and we can look at the long-term boot, and I'll focus on the shorter term a bit later on. But we can see this big resistance area here, going back to 2019, resistance, okay, a failure, came back, sort of got near it, came back, made a higher low. Now we're up here banging on this door, trying to get through here. It's a big resistance area. A break above here will be significant, as I talked about. Trend intensity rating is +2, so it's ready and set to go. And this week it's moving into this area. I don't know what it's done today, but it's looking very encouraging. And we can see again, we can see down here, some of this beautiful volume through here, driving this big trend up into this resistance area here. Now it's slowed down a little bit, and we've had a bit of selling here, which hasn't really pushed the price down. The buyers are absorbing it, and they're now pushing the stock higher. We've got a bit of a tricky thing because we're in holiday mode at the moment, so we are getting a little bit of volume, which is a good sign, I guess. So to me, this looks like a positive fund. The thing I really like about it, if we do breakthrough here, this is a significant level to break through, and we'll give it a good kick higher. Worley took over, I think it was Jackson Engineering in America a while ago. It changed the way it did things, and again, a bit like Treasury Wine Estates, it's revisiting a lot of things and renewing a lot of things, and starting to perform, and the market's starting to like it. And this is a pretty common cycle in the stock market. Stock market is a common sense place if we let it be. These things happen repetitively. It's like unexpected events happen when stocks are trending higher. These sorts of turns occur when a stock has a bad time, and all of a sudden it does a few rickety jigs and renews its business operations and changes things. And Jackson and Worley is a good stock. And so anyway, it's looking pretty good now. If we get a new high there, it will be a great opportunity, I think, for anybody who's interested in the stock market. Okay, so that's really what I want to talk about with the stocks there. That shows you a little bit about the unexpected with those stocks that blow your mind, and JB Hi-Fi is another one. Interesting enough, you'll have to look at JB Hi-Fi to see where we are set with that one there. It's an interesting situation, JB Hi-Fi, and I'm watching it very carefully. Okay, so now, last week we talked about patience in trading tactics. And this week I want to talk about the unexpected and sort of why these sort of unexpected events happen. Okay, so we're trying to set ourselves up for the unexpected, and I talked about this before. When a trend signal occurs, get on board, because that's when your upside prices are going to occur, and they occur all the time. But what is it that drives price? It's not the known, because we all know that. I mean, that's all built into the market. It's the unexpected. When the unexpected surprises happen, that's what drives the price. And if a trend is going up, the most likely thing is that the price is going to be on the upside. So expect the unexpected, and the market always surprises. It always goes further on the upside than we think, always go further on the downside than we think. And hopefully we've had enough downside for a while, having had COVID, having had the last 12 months, which has been pretty awful. Hopefully we're putting that behind us, because the stock market does spend most of its time going higher, and I think it's due probably for a bit of a good rally at the moment. So it's the unexpected we're looking for. That's what happens. Okay, so what do charts actually show? Okay, charts show things like insider trading activity. Now, we saw the levitation of Super Retail Group a couple of weeks before the result, and that's whether that's insider activity or not, but somebody knew something. It's also a build-up of market knowledge, awareness and foresight. The market has a combined knowledge, or a combined wisdom that we can't really explain, but it seems to get it right most of the time. And, you know, as I said before, it's looking 1 or 2 years down the track, which is a good sign. So that's what we're looking for at the moment. So what charts show, they show what is happening, not why it's happening. So we're not really interested in what the reason is. It can be insider trading, it can be good results, it can be all sorts of different things. It's the actual price action that really matters as to how it's moving and what it's doing is what we are interested in, not the reasons why. Okay, that's really for people who want to ponder all sorts of things. So knowledge of this sort of how to use charts is power. Okay, so the markets, as I said before, they have an uncanny foresight, and the group knowledge itself seems to work very well with the market. So it's an unanswerable question as to why this happens, but it just does seem to happen. It's the combined wisdom of the market, and it occurs regularly. Okay, so it's a mysterious foresight the market has, but we've just got to follow it rather than try and reason it, justify it. So, well, no, this can't be true because such and such. Really, it's just them saying, well, this is what's happening, so we follow it. And that's all I really do. I don't predict, I don't forecast, I just follow what's happening, and the price tells me what's happening. If it's going up, I jump on it. If it comes down, I get off it. And that's what I do. Okay. So the best insight we can use for us to try and do this is two things. One is price action, and the other is volume activity. It's not always clear, and when it's not clear, it's difficult. But when it is clear, and I've shown you some good charts today of some good price action and some very, very heavy, steady volume, it tells us that what's going to happen. Okay, it's a pretty high probability case. So we observe the price action and the volume activity, and when it presents itself, when you've got volumes like this, pushing the price higher, you can jump on it and follow it. And when it presents itself, the probabilities are very, very high that it's going to continue. So we looked at Super Retail Group before, and this is what we saw. The price action combined with that volume activity. The rawest information and the most truthful. There's all sorts of other indicators. There's the momentum indicators, which I use. There's top-down approaches, all sorts of things. But it's actually the stock-specific raw volume, raw price action that is the most truthful of all things. And the price never, ever lies. It always tells you the truth. So with Super Retail Group, it didn't. It told us exactly what was going to happen here. There was rising on good volume here. It pulled back, and that's an opportunity towards the average, which we know is always a good sign when the price stays above the average. And then we saw some selling here, which was okay. That's fine. And then we saw the market start to rally again on good volume. So we were in this stock when we broke above here back in November, because that was the signal we got. So it's a matter of just following it, backing yourself, backing what you do, backing your trade plan. Don't doubt it, because if you do, you're really not going to learn too much. So these sorts of things are fairly clear and simple to read. Okay, when they're there, and they're there for a good reason. Okay, so the only stock market advice you can trust is a price action. The price never lies, and that's how I live my life when I trade in the stock market. Okay, now, so that's what I want to talk about, stocks that blow your mind, and I reckon there'll be more coming up over the next few months. What's happening on Stockradar? For an update on all our stocks we have covered in previous videos, go to the Stockradar Trading Centre for exits, entries, alerts, stops, trend intensity ratings, everything you need to know to monitor your trading, even a special watch list to set up your portfolio in itself. Okay, so I don't have all the answers in the stock market. I just do my best, and that's the concept we all have to be happy with. We can't do any better than our best. Okay, if we do our best, then we should be happy. The stock market is an imperfect place for a start, but a good system must be able to trade through these imperfections to create profit. So I have lots of conversations with people about how we can modify my trade plan and things like that, and certainly we can sometimes, but generally I don't, because it works. Not perfectly, but it works, and it makes money, which is the proof in the pudding. So that's really what it's about. So with all the imperfections, you've got to have imperfections in any system, but you've got to be good enough to trade through those imperfections. When unequivocal evidence presents itself, you go for it and back yourself with high conviction. It's really important. That's when you're going to make your money. The price-volume combination is almost infallible. That's why we need money management control to sometimes fallible breakdown events. So occasionally something might happen and we'll change it. So we always must have our risk management in place at every stage of our trading. The stock market seems to have its foot in the door of a trending phase, so don't let fear distract you from your objective at the moment. Okay, so stay safe, watch your trends, heed your stops, give me a call if you need a chat, and I'll see you all again for next week's Insights. Thanks for listening, and I hope you have a good week.